Hey there, future stock market champions. Have you ever dreamt of picking those winning stocks, the ones that skyrocket in value and make everyone else wish they had invested too? Well, guess what? That dream can be your reality. We're about to embark on an exciting adventure, a journey into the heart of fundamental analysis. By the end of this guide, you'll possess the knowledge and tools to confidently navigate the stock market and make informed investment decisions. And here's the best part. Your dedication to learning these valuable skills comes with a special reward. So, buckle up, get ready to unlock the treasure chest of stock market success and discover the reward that awaits you at the end of this journey. Think of the stock market as a giant puzzle. Each stock is like a piece, and understanding what makes each piece valuable is the key to solving the puzzle and reaping the rewards. That's where fundamental analysis comes in. It's like having a superpower that lets you see beyond the surface and understand the true worth of a company. Intrigued? Let's dive right in. Imagine being able to see through walls. That's what fundamental analysis is like for stocks. It's a method of evaluating a company's intrinsic value by examining its financial statements, industry trends, management quality, and the overall economic landscape. Instead of just looking at the stock price, we dig deeper, analyzing the company's financial health and performance to determine if it's a good investment. Why is this important, you ask? Well, think of it this way. Would you buy a house without looking inside? Probably not. You'd want to inspect the foundation, the plumbing, the electrical work. You'd want to know what you're getting into. Fundamental analysis is the same for stocks. It helps us understand the company's guts, its profitability, its debt levels, its ability to generate cash, all the things that indicate whether it's a sound investment for the long haul. By using fundamental analysis, we can identify undervalued stocks, companies that are worth more than their current market price suggests. It's like finding hidden gems in a treasure hunt, and when we invest in these undervalued companies, we position ourselves for potentially higher returns in the long run. Now that we understand the power of fundamental analysis, let's explore the tools of the trade, the financial statements. These documents are like a company's report card, revealing its financial performance and health. Don't worry, we won't get bogged down in complex accounting jargon. We'll keep it simple and focus on the key takeaways. First up, we have the income statement. Think of it as a company's profit and loss statement. It tells us how much money the company made, revenue, over a period of time, and what expenses it incurred to generate that revenue. The difference between the two is the company's profit or loss. Next, we have the balance sheet. This statement provides a snapshot of the company's assets, what it owns, liabilities, what it owes, and equity, the difference between the two, at a specific point in time. It helps us understand the company's financial position and its ability to meet its short-term and long-term obligations. Finally, we have the cash flow statement. This statement tracks the movement of cash both in and out of the company over a period of time. It shows us how the company generates and uses its cash, which is crucial for its survival and growth. By analyzing these three statements together, we can gain a comprehensive understanding of a company's financial performance, its strengths, and its weaknesses. It's like putting together a puzzle, with each statement providing a different piece of the picture. Section 4. Nifty 50 in action. Bringing fundamental analysis to life. Let's bring this to life with some real-world examples from the Nifty 50, India's benchmark stock index. Imagine we're analyzing Reliance Industries, a conglomerate with businesses spanning energy, petrochemicals, telecom, and retail. By looking at their income statement, we can see their revenue growth, profitability margins, and how these figures have trended over the past few years. Similarly, by examining HDFC Bank's balance sheet, we can assess their loan book quality, their capital adequacy ratio, a measure of their financial strength, and their overall risk profile. The cash flow statement can reveal how effectively these companies generate cash from their operations and how they're investing that cash for future growth. Remember, these are just simplified examples. In reality, fundamental analysis involves a much deeper dive into the numbers and a thorough understanding of the industry dynamics and competitive landscape. But by using these real-world examples, we can see how the principles of fundamental analysis can be applied to evaluate companies and make informed investment decisions. Section 5. Beyond the numbers. The power of great management and a competitive edge. Numbers are important, no doubt, but they don't tell the whole story. Just like a dance troupe needs a talented choreographer, a company needs strong and ethical leadership to succeed. This is where qualitative factors like management evaluation come in. We need to assess the experience and track record of the management team, their ability to adapt to changing market conditions, and their commitment to creating long-term value for shareholders. Equally important is understanding a company's competitive advantage, what sets it apart from the competition and makes it difficult for others to replicate its success. This could be anything from a strong brand name and loyal customer base to proprietary technology, cost advantages, or a unique business model. Think about a company like Reliance Industries with its vast infrastructure and dominant market share in telecom. Or consider HDFC Bank with its strong brand reputation and extensive distribution network. These are examples of companies with significant competitive advantages that contribute to their long-term success. Section 6. Piecing the puzzle. Your winning formula for stock selection. Now that we've explored the key elements of fundamental analysis, let's talk about how to put it all together to make well-rounded investment decisions. Remember, there's no magic formula, but by combining these techniques, we can significantly improve our chances of picking winning stocks. First, start with your investment goals and risk tolerance. Are you looking for long-term growth, short-term gains, or a combination of both? How much risk are you comfortable taking on? Once you have a clear understanding of your investment objectives, you can narrow down your search and focus on companies that align with your goals. Next, use a combination of quantitative and qualitative factors to evaluate potential investments. Analyze the financial statements, assess the management team, identify the company's competitive advantage, and consider the industry trends and overall economic outlook. Remember to diversify your portfolio by investing in companies across different sectors and industries. This helps mitigate risk and ensures that your portfolio is well positioned for long-term growth. And finally, be patient and disciplined. Investing is a marathon, not a sprint. Don't get swayed by short-term market fluctuations. Instead, focus on identifying fundamentally strong companies with long-term growth potential. Section 7. Your reward awaits. Embark on your investing journey today. Congratulations! You've reached the end of our fundamental analysis adventure, and you're now equipped with the knowledge and tools to confidently navigate the stock market. You've learned how to analyze financial statements, evaluate management quality, identify competitive advantages, and combine these techniques to make informed investment decisions. Remember the special reward we promised at the beginning? Well, the real reward is the knowledge and skills you've gained. The ability to take control of your financial future and potentially achieve your financial goals through smart investing. It's a journey that requires dedication, discipline, and continuous learning. But the rewards can be truly life-changing. So, go forth, embrace the exciting world of investing, and remember, the power to create your own financial success story lies within you. Happy investing!